Welcome back to Explain the Charts. Today, July 3rd, 2025, we're diving into the SPY, the S&P 500 ETF, combining news analysis with detailed chart observations. Let's first review the recent headlines. According to recent news, the S&P 500 hit another record high on Wednesday, July 2nd, fueled in part by Trump's announcement of a trade deal with Vietnam. However, there's also cause for concern as the ADP reported a surprise decline of 33,000 jobs in June. We'll explore how these events might be influencing the market's current behavior. Now, let's transition to the charts, starting with the one-day time frame. On the daily chart, we can see a clear uptrend leading up to today's date. We've recently made new all-time highs, but we should be wary of the news around the job numbers, which could signal a potential reversal. Let's zoom in a bit to examine the recent price action more closely. Here, we can focus on the candles from late June to early July. Note the strong bullish candle on July 2nd, correlating with the news of the S&P 500 hitting a new high. However, the size of the July 3rd candle is smaller so far. This indecision could indicate a potential pullback. To get a clearer picture of the short-term dynamics, let's switch to the one-hour chart. Here on the one-hour chart, we can observe recent price movements in greater detail. We can see how the SPY reacted to different news events and assess potential support and resistance levels. From the end of June through July 3rd, we have a strong rally but some visible indecision. We can identify some resistance around 620.50, which the price has struggled to break decisively. A failure to break this level could lead to a short-term bearish scenario. Now, let's drill down further into the 15-minute chart. This chart provides the most granular view of recent price action. Looking at the 15-minute chart, we can identify a very short-term consolidation pattern. It looks like the price is range-bound, fluctuating between approximately 619 and 620. Given the job number concerns, a break below 619 could signal a further downside move in the short term. Conversely, a decisive break above 620 could indicate renewed bullish momentum, potentially leading to further gains. Remember, news events can amplify these movements. Keep an eye on any releases or announcements related to the trade deal or economic data. Okay, let's summarize the key levels. To recap, keep a close watch on the 619 and 620 levels. A break below 619 might lead to further downside, potentially testing support around 617.50. On the other hand, sustained trading above 620 could open the door for a move towards 621 and possibly higher. The likelihood of a short-term bearish or bullish move is currently about 50-50, with the jobs report and news sentiment acting as potential catalysts. Long-term, the S&P 500's overall trend remains bullish, but caution is warranted given economic uncertainties. Monitor upcoming economic reports and global news events for potential impacts on the SPY. Thanks for tuning in to Explain the Charts. Stay informed and trade wisely.